First-time homebuyers, is the 50-year mortgage actually on its way? Is it worth it? Will it help you get into a home or make a home more affordable? My name is Steve Doherty. I'm a loan officer in Raleigh, North Carolina. Today, I want to talk to you about whether the 50-year mortgage is actually coming, and if it does, will it benefit you? Okay, so first, what will a 50-year mortgage do? It will simply spread the debt payback that would otherwise be 30 years down to 50 years. And that will reduce the monthly payment, making a home at a certain price point either more affordable or allowing you to have an increased budget. But how much will this actually help out? Well, on a $420,000 purchase price, putting 20% down, that only reduces the monthly payment by about $240 based on current interest rates of about 6%. Let's compare this 50-year mortgage to what we now have as the standard mortgage of a 30-year mortgage. Imagine two purchases, both at $420,000, both putting 20% down, both at 6% interest rates, which is generous because I doubt the 50-year mortgage would have the same interest rate as a 30. So after 15 years on the 30-year mortgage, you will have paid the balance down by about $96,000. That means you own $96,000 of more of your home than when you started off. By comparison, the 50-year mortgage, you would have only paid the balance down by about $24,400. So you are gaining equity at a much, much slower pace. Never mind the fact that you would theoretically be in mortgage debt for 50 years, for an additional 20 years longer than the 30-year mortgage. Also, over the life of a loan, that 30-year mortgage would cost you about $413,000 in interest. The 50-year mortgage would cost you about $771,000 in interest. So that's a significant increase. Okay, let's touch on the viability of this. Could this actually happen? Remember that mortgages after closing are securitized, right? They're bundled together and they're grouped so that investors can invest in a share of these overall pool of mortgages. In order for those mortgages to be purchased by investors, the interest rate has to entice them. I don't know what the interest rate would have to be on a 50-year mortgage in order for investors to want to invest in them once they're securitized. So if it's much higher, if that interest rate is 0.5% higher, then those meager monthly savings, the $240 we referenced, are going to be even lower.